Hi guys, how are you? Vladimir here, and this is the weekly forecast video for the week starting on the 31st of July and the beginning of August, the official summer, the months that almost everyone who could afford it goes for vacation. And as per traders, August is normally the month when everyone says, bye bye Mr. Market, I'll see you in September. That's a very known and common thing among traders. And normally in August volumes drop down, especially the beginning of it. But this year might be a bit different. A lot of things happening geopolitically, a lot of things happening with the US and Mr. Trump and his tweets, and every day something new comes, some new rumors, some new speculations, I would say maybe, and that affects the market, and we can see that. We actually can see that a lot of zigzags though, but big moves. So this week is non-farm payrolls week, and we can expect the market, maybe the majority of it, to be quiet at the beginning of the week and warm up as it comes closer. Let's go over the calendar and see what can we expect this week. So that's our calendar here. So it starts very interesting basically tomorrow morning, this night in Australia, and we have the rate statement there, the cash rate decision. Then we have the manufacturing PMI in Britain and the ISM manufacturing PMI in the US. All that to happen on Tuesday. On Wednesday, warming up with the ADP non-farm payroll, non-farm employment change. Then we have the crude oil inventories, trade balance in Australia. From my point of view, it's the second important data to be in Australia in a row after cash rate tonight. And Thursday, that's where it's very interesting. Official cash rate in Britain. We know how much pressure it starts to be on Mr. Carney. He is not the one to rush to increase rates normally. We remember his period in Canada. But he is very well aware of what's happening around. Later or sooner, Britain will have to push it further as well. And that's what probably, maybe not this week, but generally would push a bullish pressure on the pound pairs in the coming period. The expectation to hike the rates on the coming period. Maybe it's not going to happen this week once again, and according to the forecast, as it's by the analysts, it should remain the same, 0.25%. But the reality is way different from forecasts, right? And surprises can happen. As per myself, I don't think they will do that right now, but they might. And that's what most likely will keep the pound dollar and the other pound pairs bullish on the coming period. Again, it might not happen this week, but that should be logically the new trend. Then it follows with the speech of Bank of England Governor Carney, and we go through the monetary policy statement and the retail sales in Australia. Now, according to expectations, this week should be kind of bearish for the Aussies, according to, again, to the expectations. In reality, things could go different, and if they will, there is a good chance Aussie dollar will cross the 0.81 or further, and we will discuss about it soon. And the cherry of this week is, of course, the non-farm payrolls and the unemployment rate in the US. Actually, it would be very interesting to see how it affects on the US economy, the fact that they increased the rates for a few times. Changes normally don't go and happen immediately, but they develop, and it will be very interesting to see how this one is developed. So let's start with the dollar Canadian, a pair that we've been following for a while, and you know my levels. I've been talking about it accurately on the last weeks. That was the zone, right? You can see right on the chart, that's our zone, and that was the cycle basically. We have 261.8 of this cycle, and we have the second cycle to be right from here. It all brings us to this cube, and this is where you can see right here a lot of actions happen. Now, if we connect to that the crystal ball and our predictions, take a look what we have here. You see that? All this zone is a zone of buys. And take a look here. Okay, we had the bottom expected to be anywhere for the end of the month, let's say 28, and the beginning of this month, 3rd, 4th, and we are on this range right now. This is the week. It started with the end of previous week. It happens now live, and you can see where it actually bottomed, 27, 28 as expected, and it's building it up. So I would remain bullish in my mind as long as this low holds, because if this low will not hold, there is not a bad chance at all we are going to see that dropping a bit further to visit this low, and that could be around the 120-118 zone. That's not a bad chance for that to happen if this low does not respect. Now, of course, it can keep dancing around and keep doing some zigzags here before it makes the move up, but generally, for me, it seems a good place for the buys. So the question is how these buys could happen. One of the best options was right on Friday, despite of the big move down, but that was the option here. We had this beautiful convergence after a few lows to be created, and we got this trend line broken as a beautiful false break. That was continuing divergence with 4 lows in a row. Beautiful continuing divergence on principle of a regular divergence, which means negative, positive, negative histogram. But since we had few lows in a row on the histogram, that makes it a continuous divergence, continuing one. So once again, as long as this low holds, there is no reason to look for sells from my point of view, and only for buys or retraces should be bought. And again, be careful here. It might also, by the way, turn to be a range. We have one false break here, one false break here. That's what could happen as well. That's definitely an option. Okay, so stay aware of that situation as well. Next one is the New Zealandian dollar. Now this one reached the levels we wanted. It did cross the 0.74. It actually even crossed the 0.75. The biggest question now is game over. Now let's have a look on the weekly cycles. Now this was the first one, triple cycle up, that is now coming to the 61.8 area. You can see that right here. Okay, we are right there. Now, yeah, theoretically it can dance around the 0.77 or so. This is the entire range we have here. Let's put the lines. Okay, now how do we do a range of cycles? Normally we get 10% up and down of the entire move. So we have this to be 1500 pips, which means 150 pips down, this, and 150 pips up. That would be the range of action. And we are now in the range of action. So that's on the weekly. We have the divergence forming on the moving averages here. No histogram, but moving averages. On the daily, we have another cycle on the short view here. And guess what? We are right on the 61.8. Now, I said before, there is a chance we are going to dance around the 0.77 even. Now, that's still an option because we have here a monster magnet. So if we will slowly go there, expect something big to happen right from that place. So from my point of view, we are already after shorts. You can start collecting the invests, or if you don't want to deal with invests, the best way to get involved in such situation is to look for 2 false breaks in convergence, because we are kind of against the weekly yet. So that was first false break. A second one might happen right here, or already here. So whichever of the scenarios would happen, actually, we can look and join it. Now there is one you can see here, okay, that was the divergence we got here. That was between the first high of the trend line and the current one. So let's make it like this. The first scenario is we get a new high, false break, and then we can look for sells. Best way would be, of course, gain the lower lows and then sell rallies. Make sense? The second scenario is if we assume that the first high, false break already completed, that would be the low to be broken, and from here we can look to sell rallies versus this top. So that's the two plans we have here for the New Zealand dollar. Before any of them happen, unless you are invest, it doesn't make sense to trade it. You can see what we are facing in reality. Okay, and here we are in the Aussie dollar. Now this pair has the room to go all the way. Let me put the line here. Now that was our correction, and we have it around 081, 082 at least, yeah. Then we have this cycle, and we have it also right here. So technically the Aussie dollar could make new highs easily. I would prefer to go long if we can get here some kind of a bullish hidden divergence. If we can, that should be a great opportunity to go and long that one. If it just keep climbing, then this is the trend line that I would be looking, here. This is the trend line I would be looking to respect for the climbing situations, okay? And the targets, as I said before, 081, 082, where from I do expect the pair to stop for the temporary period. Aussie Kiwi, another great one. The pair did the 61.8. Well, actually not really, because it was missing a bit. You can see here. But again, with 10% zone, we are right there. So the question now, what's about to happen from here? And I do want it to start to create new highs, and then pullbacks and look for the buys. If that scenario does not follow, we will be looking for more false breaks and then trend line breakouts. Wow, where this line came from. Oh, that was... Here you go. Ooh, that's pretty hard to draw with a mouse. Even though it's Logitech. Anyway, so this is what we are looking to do here, and from this place to go long. Now take a look, the pair is bouncing from the 20 MA. Let me erase these lines, guys. It's bouncing from the 20 MA on the daily chart and the 200 MA combo. Now this is a monster combo normally. When it comes together, it's very short term and a very long term, like a monthly line, 20 MA, right? Summarizes the monthly average. And a 200, which is summarizing almost annual average. So that's why it's very, very important. So that's for the Aussie and the Kiwi. Pound dollar. As I said before, I expect this pair to climb higher, 132, 136, and we have this trend line. And in simple words, as long as that holds, I expect this one to go and reach the 132 and then maybe even 136. So every drop down, for my point of view, it's a buy. Euro dollar is on its monster levels. We spoke about it the previous week. We have all the cycles there, and yet this zone is anywhere around the 117, 118, and might, listen carefully, might extend to 120. Now, we do have divergence everywhere, basically, okay, besides the weekly, of course. And if we go against the weekly, we need to get 2 fall breaks. On a daily chart, not even one. On the 4-hour chart, though, 2 in a row already happened. Now, we need, for that, lower lows in order to play safe. That's the current low, that's the current low we have. And if it completes one more false break, then this would become the low. So we wanted to go lower here and create a retrace, which will give us the chance to sell. As long as it didn't happen, the euro dollar might climb fully higher. Now we are on to 261.8 currently here. We are on the duplication here, but I said before it might extend a bit more, and it actually might do that pretty easy. Okay, so we need to wait patiently before we actually hit the button to trade, and the best way to do that is to get reversals, lower lows, and only then sell reversals. As long as it didn't happen, why to sell? Right? I mean, yeah, there are false breaks, definitely, but there is not even a real trend line breakout. That was the one, and you can see it bouncing like by touching the line, 1 pip, and you can see there is no momentum with the breakout. So on such period, just give it its time to recreate what we want to recreate. Next one, pound yen, another pair I expect to continue higher. This pair has all the reasons to climb towards 130, 150, 151, pretty easy. So from my point of view, we are long here, and I would say as long as this low holds, we'll look to stay long there. It's making here on the intraday, like this is the breakout we have, and it's recreating this. You can see this convergence. Okay, so it's pretty good call. So retraces, and we are after buys here, as long as the low holds, of course. Next one on the list, euro versus the pound. Get into the range, which means simply don't trade that. But as long as the top holds, pressure remains bearish. And from my point of view, I said it not once. 089, 090, 091. All that zone is a zone for sells. So the best way is again to gain the momentum, get some lower lows created, some real trendline breakout, and only then we can actually go and trade it. Before that happens, why? Doesn't make sense, right? Alright, let's continue. Next one on the list, pound versus the Canadian. We spoke about that pair as well. Triple cycle down or special cycle down, call it whatever you want, guys, it doesn't matter. 2, 3. Okay, we expect that. So stay long, nothing else to say here. Has a beautiful trendline breakout here and here, of course. Okay, for lower lows. Actually, this trendline is a bit not correct because it's not in the last 2 candles range. So what does count here for us is the lower time frame trendline. Actually, that was the one that we can use, of course, for the breakout. That was another one we can use for the breakout. And now it's regaining the momentum. So stay long, nothing else to say here. Dollar franc, a pair that we have been talking about for longs for a long time. Did a false break, did a convergence. Let it get 2 waves down for you and look for buys. Very simple. As long as this low holds, we are after buys. Currently it's making 1 movement here. We want to see that doing this way, and from there looking for buys. All that is relevant as long as this low holds. Now, take a look on the crystal ball, and you see, it's already preparing us for buys, right? Now, a possible low against first, third, that could happen on the coming days, while other majors going to create tops. This one should probably create bottom, and from there give us the chance to look for the buys. New Zealand and Canadian is another pair I have on my list, and I want 2 waves here to look for sells. So basically we got wave number 1 crossing this high finally. So this is the first wave we have. All that, yeah. This the second should be. From here, once the divergence completed, we can look for the resells. By ideal, that should happen anywhere around the 0.95 zone. A bit below, also acceptable, of course. Okay, dollar yen. Well, for me, remains ideal for sells. I'm not quite sure how to read the current situation. As I said, this is probably a range, which means sell rallies for us. But to be honest, I would not deal with this pair right now. I think there are much better pairs to deal with than that one. Let's continue, guys. The next on the list, gold and silver. Gold approaching to the top of the range, where from we might be looking again for the possible sells. That should happen here somewhere. Okay, it's completing for us some spatial cycle here. One, doubled, and this one should finalize it here. It could get extended, of course, so that will be triple correction and one more, and sells. As long as we don't have two false breaks and lower lows for convergence, which means currently we have this, right? Okay, so as long as we don't have lower lows, no sells. And that could, of course, go and make it extend like this, and then lower lows. Okay, so what I'm showing you here, guys, is do not fall into this trap. It's too easy. Too easy. It looks like, what a level, let's sell it. Why? Without a setup, without a trendline breakout, without divergence completed, without any candle pattern, without any statistical top or bottom. There has to be logic behind any step of ours, right? And that's why I always say, wait for your setup. Wait for your setup. Don't create a setup. Let the market create a setup. You just trade the setup, but the market has to create it. Okay? And when you go against the trend, the best way to do that is to be more conservative, which means false breaks first of all, to know like why do we like false breaks at all, right? False breaks represent weakness, because assume this is a high and the bulls are trying to break a high and fail. They're trying to break a high again and fail, and then bears take control and create lower lows, which means bearish momentum change, right? And that for us is the best thing we can wish. That does not guarantee a perfect setup, but it guarantees that our trade would be from the best starting point potentially. And that's the best we can do, to start our trade from the best technical point. Once we do that, we are on the best odds to finish successful. Because even if we fail once or twice or thrice, we still have the best risk reward in that case to cover all the failures. And that's the game of the statistics. It's not about how many times you are right. It's about how much money more you make when you are right than on the time you lose when you are wrong. That's all. There is no ego, and there is no competition who read the chart better. You are not analyst in JP Morgan or Bloomberg to show the best of the results. No. You are a trader that wants to make money. And for trader, the bottom line is profits. Do you know how many times I am wrong reading the chart? Who cares? The only thing I care about is on the times I am right, I make more. And you do that by keeping a good risk-reward plan. And that could be by fixed lot or percentages. For percentages, it's easy. You risk same percent amount, 0.5%, 1% from your account, and aim to make more. For fixed lot, it means you trade all your positions the same size. I love that plan. I love that plan. Because then you trade for pips. The more pips you make. So you can be wrong for 40 pips, 50 pips, 60 pips, and then boom, you catch the 200 pips. That makes sense? You make money. So that's basically what it is about. So that's, I go back to gold. We have to wait for setups. For silver, same story. We kind of have here a triple cycle completing. And my view is that should happen or here or here. That's the highs that I believe this pair is going to stop from. So one here or one higher here. And we are going to get this beautiful fat correction. By the way, in terms of days for silver and gold, okay, take a look. We have all these levels coming. And in terms of days, 3rd to 6th. This is the zone for tops. So stay tuned there. That's for the silver, and for gold, 1st to 6th. Again, this week. Okay? So let it create this final run. False breaks, lower lows, attack. Indices. After beautiful convergence, we can say finally, as long as this top holds, look for sells. I think that or can fly, sorry, don't fly, drop continuously, or second high here, and then with the breakout, look for the sells. Same with S&P. After this convergence, finally is there. Stay short as long as this top holds. If this top does not hold, again, don't try to be a hero. Let it recreate itself. Make sense? And then go and trade it. So that would be all for this week. I hope you enjoyed it, and I hope you like the videos I do for you guys. My goal is very simple, is to give you the best of the scenarios to follow, and to give you the levels to watch. Okay, because when you have your clean and clear plan, what to follow from each level and what are the directions, it does not really mean it doesn't really matter what strategies you use. Okay, as long as you keep the rules, of course. You can use with intraday strategies, trend, reversals, breakouts, whatever you want, as long as you have your directions and levels, because then you know from what levels you're looking for buys, for levels you're looking for to stop sells, and so on. Very, very, very important. Very important. So that's all. Thank you very much. Once again, I hope you enjoyed the video. If yes, please show your appreciations by clicking the like button. Leave your feedback, your comment. You can share with anyone you want, and help us to help the community to get well, possibly the best education we can give them. So thank you for your time once again, and I'll see you soon. Bye for now.